everyone, and welcome back to Mining Network. So I'm joined with John Black here, who is CEO of Regulus Resources. So thank you for joining me today.
Thank you, Emma.
So let's just start by getting a brief overview of your company.
Okay. As you mentioned, I'm John Black. I'm the CEO of Regulus. And Regulus is an exploration company. We're listed both on the TSX-V in Canada and also on the Lima Stock Exchange. We specialize in exploring for large copper or copper gold deposits, capturing the opportunity, drilling them out, de-risking them, and then ideally selling it to a major mining company.
Brilliant. So just to kind of start us off, can you run us through your current market cap, share structure, cash in the bank, and burn rate?
Okay, excellent. Our market cap right now is about $70 million Canadian. We have a little over 100 million shares out, which is a relatively low share count given the length of time we've been on the project and the size of the project we already have. So it's quite good in that sense. Our burn rate is approximately $1 million Canadian a month, as we're drilling with 2 drill rigs right now, which keeps us moving along pretty well. And we've recently completed a $5 million US financing with a Cisco that has provided us funds for the next 6 months or so.
Brilliant. We'll definitely get into those more later on in the video. So for those less familiar, can you remind us what the current estimate is of the resource that you released in 2019?
Certainly. The 2019 resource that we put out was after our Stage 1 program, and we considered our first resource, our interim resource, that's the first look really on the project. And we have about 250 million tons of indicated mineralization at a grade of 0.48% copper and 0.29 grams per ton gold, so a very attractive combined copper gold grade on the project, with an additional 260 million tons of inferred mineralization at slightly lower grades. So combined it's over 500 million tons of very attractive mineralization. And one of the key components of that resource is that it's an extremely low strip ratio. It's less than a 1-to-1 strip ratio. It's a 0.85 strip ratio, which will be very important down the road when we start talking about the economics of the project.
Definitely, and you're a geologist yourself, so could you give us a bit of an overview of the geology of this deposit, because it is a huge deposit?
Certainly. It's a fascinating deposit in the sense that we have 2 distinct styles of mineralization on the project. The majority of the project is hosted in what we call high sulfidation epithermal mineralization. So this is volcanic hosted, Miocene volcanic hosted mineralization, typical of a system like Yanacocha, which is nearby to us. And it's important to note that we only have about half of the deposit. There's a neighbor next door called the Coimolache Joint Venture, which not only has the other half of the large sulfide deposit that we have, but they're currently mining the oxide cap on the mineralization. So when we think about this system, I mentioned that we have over 500 million tons of mineralization on our ground in sulfides. The neighbors have more than that on their ground, and they're mining the cap of this off. They're pre-stripping the deposit essentially. And then beneath the high sulfidation mineralization, we have skarn mineralization, which is more typical of the big skarns we see in Peru, like Antamina or Las Bambas. Completely different style. Copper gold, similar grade, but a completely different style of mineralization. That's what makes this deposit geologically very fascinating to us.
Definitely, no, it sounds it. So you've mentioned previously that the business strategy is to find a deposit of size and then potentially for a major to buy the asset. So what's the next stage for that to happen?
With each project, it's a little bit different. As we've discussed, the key thing is once we've identified the project is to first show the size of it. So we go through typically a series of stages on demonstrating how big the resource is. We've completed our Stage 1 program with our first interim resource. We've just almost completing our Stage 2 drilling program. So we'll do a resource update about Q2 of next year, continue to show the size. We're not near the edge of the deposit yet. It'll keep growing. And then the key next step would be to take it to a PEA, begin to show what the economic potential of the project would be. However, on this project, we have an interesting challenge because we only have a portion of the deposit and the neighbors have the other portion of the deposit. It would be very much more attractive if there was a consolidation of the district. So we believe that that's the logical conclusion in this district, and we believe for a variety of reasons it would be wise for all parties to do that in the near future. Primarily that the neighbor's oxide mine runs out of ore in about 4 to 5 years. And so when they run out of that ore, they need to make the transition to the larger sulfide mine. And to do that in the most economically attractive manner, it would involve our project. So the key steps on this project will probably be a consolidation of the district, and then collectively we would be able to show the full size potential and the economic value of it. I think at that point we would most likely attract interest in larger groups that might want to take our position.
Definitely. So you mentioned there a little bit about your neighbours being an operating gold mine. Could you give us a bit more kind of detail about who they are and their current capacity?
It's a group of 3 companies called the Consolidation joint venture, and the 3 companies involved are Buenaventura, who's the operator, as a 40% owner of the joint venture. Southern Peru Copper, or Grupo Mexico, has 44%, and a Peruvian family company called Espro has the remaining 16%. So the 3 of those groups together operate the oxide mine, and then would be looking to the future to make that transition into the sulfide mine underneath.
Brilliant. And how does the mineralogy differ between kind of your land package and theirs?
Tantuatai, which is the name of the mine that the Consolidation joint venture operates, they have almost entirely the high sulfidation epithermal style mineralization on the southern half of the district. On the northern part of the district where we're at, we're about 50% high sulfidation and about 50% either breccia hosted or true skarn style of mineralization, mostly at depth. So their mineralization is similar in tenor to ours in terms of grade, but more the high sulfidation style. And the important thing on that is the high sulfidation mineralization can be fantastic grade, but it does come as sulfosalt, so the primary sulfide mineral or the copper bearing mineral, and they contain arsenic. And so we have to manage that arsenic issue, and it's important for us to demonstrate right up front that that is a challenge on it. But fortunately, there are a number of new technologies emerging to handle arsenical copper sulfide ores. The arsenic content in most copper sulfide ores worldwide are rising, and most major copper or gold companies are developing technologies that can handle it. Basically, you look to stabilize the arsenic into a mineral called scorodite, which is non-soluble and safe to store, and it avoids putting arsenic into a concentrate. And so 10 years ago, arsenic was much more of a challenge for us. Now we actually have companies approaching us because we have arsenic, because they believe they have the solution to it.
Oh, brilliant. No, I was wondering about the arsenic and how you were going to overcome that, so that's really interesting. So are there any other significant neighbours in the region apart from the gold mine?
We're actually only about 7 kilometers away from another active mine that's called the Cerro Corona mine, which is a goldfields mine. It's interesting to note that as well, because it's a sulfide mine, so they do milling and concentration instead of heap leach like we see next door at Tantuatai. But they run out of ore in 2025. So about the same time that the oxide mine next door to us runs out of ore, they run out. They'll continue to process low-grade material for some time beyond that, but they'll have a notable drop in their production in 2025. We view that as an opportunity that they might want to participate in an eventual consolidation of the area as well. We effectively have 2 mines, modern mines that are medium to almost large-sized mines that have been quite profitable for their owners, that will both run out of ore in the near future. And we see the opportunity to have those 2 mines transition into a much larger, longer life mine. It's a type of mine that we refer to as a multi-generational mine, one that will last for 40 or 50 years and provide opportunities for communities over a long period of time. We intentionally look for the large deposits like this, partly because they're more valuable if you identify one, but also because it's much easier for a mine to provide social benefits for a community if you have a long mine life. It's important to us, and most of the major companies want fewer, larger, longer life mines because it's easier to manage their interaction with communities and provide lasting benefits.
Definitely. So leading on from that, run us through your thought process behind the recent Osisko royalty. Why did you opt for that type of financing rather than another form?
Great question. As you and many of your listeners are probably well aware, it's a bit challenging right now in the economic conditions within the space that we work in. And to obtain traditional financing through a private placement is difficult, and it's also highly dilutive to us. Our share prices are not at the level that we prefer them to be, and you typically do a private placement at a discount to market with a warrant. And so when we get into situations like this, we look for other forms of financing that are less dilutive. That's just trying to protect the upside potential for our shareholders. We've had a long-term relationship with the Cisco or Cisco Gold Royalties. We know them well, they know us well and how we work. And they approached us. This was actually an idea that Adam Greening, our VP Corporate Development, thought about. It was a rather innovative situation where we had a number of small royalties on the claims that we'd assembled on our project. And with the Cisco, they offered us some financing in the first stage. The first stage was $12.5 million US, as essentially cash to us with no equity component to it at all, in exchange for the right that if we bought a royalty, they would get half the royalty and we'd extinguish the other half. So it's an interesting way for us to actually reduce the royalty load on the project, and for them to acquire royalties on the project and modernize them, clean up how they're recorded. So we just completed a second phase, a second agreement with the Cisco that involves some additional peripheral royalties on the project for an additional $5 million. So the last $17.5 million US that we've put into the project has come with no equity dilution at all. We are giving up royalties, but we're reducing the total number of royalties on the project. So it's kind of a win-win situation on how we've done that, and it keeps our share count low in tough times in the market.
So could you run us through the current drill program? And obviously you've got a monster deposit here and you've got inferred and indicated. So do you expect the overall size of that to increase? Could you talk us through kind of the next step?
Our first resource was based on our phase 1 drilling program and a lot of historical data. And we also had a collaborative agreement with the neighbors that allowed us to use some of their data to constrain our resource. Since the completion of that resource, we've drilled an additional 30,000 meters of drilling in phase 2. And if everything goes well between now and the end of the year, we'll complete phase 2 by Christmas of this year, do a data cutoff, and we'll process that information, and we should be in a position to do an updated resource in about Q2 of next year. We anticipate a notable increase. We wouldn't be doing this if we didn't anticipate there'd be an increase on that resource. As I mentioned, we had a little over 500 million tons right now. At this stage, we focus on trying to find out how big the deposit is. So inferred is okay for us, and we can use inferred for a PEA. We worry about moving it to higher degrees of confidence as you move towards pre-feasibility. So we'd anticipate that we'll see a nice increase on this. I mentioned that the neighbors have a slightly larger resource than us. They reported a little over 900 million tons of all inferred on their ground at a little bit lower grade than ours. So that's, when we look at the reported size between ourselves and the neighbors, that's over 1.4 billion tons of mineralized material at very low strip. And both of us are open for significant expansion. This will continue to grow. It'll be one of the larger undeveloped copper deposits, sulfide deposits out there.
It sounds so impressive. So just to kind of finish up here, as a management team, what are you most proud of over the past 12 months that you've kind of accomplished?
Really, one of the things that we're very proud of is in Peru, sometimes there's interaction between communities and mining projects like ourselves, and it can be on a variety of fronts. Everything from true concern about environmental impacts of mines to, in many cases, there are people that are protesting, hoping for benefits to come from that in exchange. So the interaction between communities and an operation like ourselves is critical for us to be able to move forward. And 2 years ago, we encountered a situation where there was some social protest on the ground, and we chose to stop our work until we could resolve that. And our team has done a fantastic job of working with the local communities and developing ways that the communities demonstrate the support for our project, not simply us telling them that we're good guys and going forward. What really allows us to continue to work is that the communities stand up for us and indicate that they want the project in their area. We oftentimes focus on what we do as geologists and grades and tons in the geology, but the community people that work with us, and all of us are community people in our company. The geos are representatives of the company as well. But the team overall has done a fantastic job to reestablish that social license and confirm that we can go forward. And that, to me, is one of the things that I'm most proud of on the project.
So lovely to hear, because I think that is such an important aspect of any kind of mining or organisation or company. So what key milestones can we expect to see in the next 12 months?
In the next 12 months, as I mentioned, we're completing our phase 2 program. Yep. So we'll look to do a resource estimate update in approximately Q2 of next year. The real key milestone is coming is not one that we can determine when, but I can paint the picture that it's a logical thing for us to do, and that's really some type of consolidation in the district. We'll continue to grow the mineralization on our side. We'll improve our hand, if you will, at the poker match that we'll be having, and likewise the neighbors will probably do the same on this. But for both of us, we can unlock the full potential of the project when we reach some type of a consolidation or collaboration in the district. And we're certainly keen on doing that. We believe it makes sense for the neighbors to do that as well, and that's really what we're gearing towards. If you see that happen, that's going to be a point where that just unlocks the ability for all of us to see the full potential of the project.
Definitely. Well, thank you so much for your time today, John. It's been a pleasure, and all of us at Mining Network look forward to seeing what happens next.
Perfect. Thank you very much.